Daniel, thank you for being here with us this morning. This is quite an interesting market, to say the least, that we're in. We saw this historic day on Wall Street yesterday. Right now, at least, we're indicated higher. As far as I can tell, nothing fundamentally changed overnight to swing that action. So if you're an investor waking up this morning, tuning into Worldwide Exchange, what are you to make about what's going on in the markets? We saw Asia significantly lower. Europe is bouncing higher. What's going on here, and what's to come?
Well, after such dramatic declines, we've even seen this pattern over the last couple of weeks. It's not surprising at all to expect the markets to bounce back. That isn't going to necessarily tell us all that much about what's likely to happen over the next month, 3 months, or 6 months, which as an individual investor certainly is what we need to be thinking about. In terms of explaining why things were so dramatic yesterday, it probably does go back to the ECB and the broad questions about the ability of central banks to help economies come out of a recession. That said, if we look at the declines that we've had relative to the economic impact that we anticipate because of the virus, it does seem disproportionate. So that's why we actually, in the medium term, are still constructive and are looking to buy the dips.
So it wasn't just the ECB action yesterday. We also saw some action from the Fed, and it seemed to reassure investors and markets, albeit very briefly. And then that sort of went away. So in your opinion, is there more that the Fed or other central banks should be doing? Or is this not their crisis to solve? Is this now in the hands of fiscal policymakers and perhaps some dramatic tax cuts there? Would that help? Do we need that?
In the short term, I think so. We've had these calls for a bigger role for fiscal policy over really, since at least Christine Lagarde took over as ECB, but, this has been going on, frankly, for years. In the short term, absolutely appropriate and necessary when you have a short-term hit to supply and demand like we've had. It is absolutely the role for fiscal government support to step in to try to offset that. Otherwise, you have the risk of a deeper and longer recession. Over the longer term, the role of fiscal policy, particularly in the Eurozone, I think is a bit more problematic. But right now, we do want to see government stepping up, taking into account what kind of support they can provide to individuals, in addition to the central banks providing liquidity to make sure companies that are seeing a short-term squeeze don't actually run into much more difficulties later on.
So, of course, Daniel, we're going to have a lot of viewers tuning in to this program and other programs throughout the day around the world to really try to understand what they should do. I think everyone understands there's an awful lot of uncertainty. We don't know what the government or governments will do. We don't exactly know what will happen from the monetary side any further than what we already know. So if you are looking at your portfolio or managing portfolios for others, what's your advice?
Well, it's quite, as always, it really depends on the individual and their risk tolerance and what they've already had allocated. I think the thing to think about, we have gone through markets like this in the past, and what will happen, and we think is happening, is you do see opportunities open up. So I think at a minimum, you want to be thinking about when you feel confident that the markets have turned, where are the opportunities? Where do you think there's going to be a chance to buy an asset that's overreacted, that swung too far, and then you would expect outside gains later on. So that might be something with a slightly more optimistic end game to think about when you do see all the red on the screen.